My name's Barnaby Milbourne. I'm here from Zen Gold today, but what I'm actually going to do today is slightly similar to Marcus. Some of the respects I will click over because obviously we've already gone through those. My talk's going to be based in these three parts. So I'll be starting with the history of gold and silver as money, working out the historical economy and the current economy and how that's going to affect you, and then sort of go on to the company side of things, so what I can offer for whatever you need. And I think that's most important. At the end of the day, I don't know you. I don't know what finances you've got right now, and I don't know what you want to have in the future. So I can't offer you a product because I don't know what you want. So what I'm going to do is offer you a few things about the economy so you can work out what you want, and then a few solutions, and you can choose the one that you think is best for your particular circumstances. And we'll finish with a bit of Q&A and hopefully not too much sleeping by the end of it, because I do appreciate it's about 4:30 in the afternoon, so your bums are probably getting a bit numb by now. So we'll start with part one anyway. History of gold. There really is a 6,000 year history of gold. It's been used by humankind, not just mined, as Marcus said. That's been going for a long time. But actually as money, as a form of trade, we've been using gold for 6,000 years. Now I've just used a few here. You've got Homer, Iliad and the Odyssey. Hopefully we've got a fairly well-educated audience who know what I'm on about there. Pretty sure all of you know that. And Jason and the Argonauts, you might say, well, hang on, the Golden Fleece is Greek mythology. But where did it come from? Well, actually, that's one of the very earliest mining techniques for gold, because gold gets eroded by different materials, mainly the rain. It will run down rivers into sand. So gold is naturally flakes in sand. So what did you do in the river? You put a fleece from a sheep. And all the large particles used to get caught in the fleece of the sheep, and then they used to hang up the golden fleece. And that's where the history comes from. So there's a lot of basis in history. And Marcus even mentioned the Lydia, 700 BC. They have one of the longest standing gold economies without inflation that lasted. And they used this electrum, which you can see an example of a coin here. And that was actually based 63% gold and 27% silver. And long before Christ. So we are going back a fair bit here. Gold is even mentioned in the Bible. And then if we jump forward slightly more to current times, Mr. John Marshall finding flakes when he built his sawmill, Sacramento, California, the Californian gold rush. And that's probably more relevant to most of you today because it's slightly nearer to our history. And then sort of the last major event was when President Roosevelt outlawed gold ownership in 1933, which we might come to later on, because guess what? If they've done it before, they can do it again. So just be wary of these things. And if we go to gold and silver as money, you know, people think of it as a commodity. It's not. It's a monetary base. It always has been. As I say, the word for money derives from silver in 19 different languages. If we just stay on our own little island, if you go to Wales, you've got Arian. And argent, Arian, it's all derived from silver, Latin from silver. All comes from silver. Dinar and dirhams are units of weight. You'll find nearly all monies in the world are based on either a weight or something like silver or gold as the basis for the very word for money. As Marcus mentioned, pounds and ounces. I mean, where do you think it all comes from? All derives from the same place. Now, gold standard was actually devised by Sir Isaac Newton. Not many people knew that, but he used to actually be the master of the Royal Mint. And the gold standard actually lasted for 200 years unchanged. It did actually last past 1917. They did start to bring in laws at the end of the 1800s, which is eventually why it was phased out, because basically he said to do that thing, and then they started bringing in laws to change it slightly, and guess what? Then it failed, because they started to change it. And then in another major factor in 1971, President Nixon officially ended our gold standard, because as you saw, I promised to pay the bearer. Up to 1971, that theoretically meant that the bank should pay you that weight in gold or silver. And of course, now it's just a piece of paper. So enjoy your paper. And Marcus did touch upon this, gold retaining its value through time. Now actually in the 1900s, it was fixed around $20 an ounce. And it had stayed there for hundreds of years. It stayed like that from when they fixed the gold standard. It managed 200 years and it barely moved a dollar either way, because it is a standard, and that's exactly what it was intended to be, a complete focus to maintain a constant price so you don't have boom and bust, which is what money does. So Marcus happened to mention the suit, wonderful analogy, and there you can actually see $20 an ounce as of yesterday, worked out about £834. So for a tailored suit, if you go into Savile Row or somewhere, I have no idea, but you'll probably find that it's about that price. But I can use that for any example. And there's a Ford, the Model T Ford, $850. That's what it was bought out as in 1909, which was 42.5 ounces, if you take $20 an ounce. And take that today, that equals £35,445. And I went on to Ford last night, because I wrote this talk sort of in the early hours of this morning and last night, and I priced up a new Ford Mondeo, and it was $33,370. So, you know, it's not a precise science. I'm not saying it's penny to the penny, but you can see that what was true in 1909 is just as true today. And I can take you back for different things to the price of chicken and eggs if I use dinars and dirhams, and they pretty much cost the same now as they did at the birth of Christ. You know, it really does maintain a value. So now you've got a basis, but if you see from this graph, that's actually, as you can see, US dollars and pounds. Sorry about the red on black for those of you whose eyesight isn't so great. But basically, if you know, it's not hard to see that that line's basically going like that, and now it's about here somewhere, so we won't even bother putting it on the graph anymore. It's going up. So hang on, I just said it was completely standard over thousands of years, so aren't I contradicting myself? So if we look at it a slightly different way, use gold as base one. So if I use gold as my yellow line going across the graph there, and I put these as a 200th, a 400th, and a 600th of the value, rather than looking at it the other way, you can see that the money you had in the 1900s, had you just kept it, is now worth about 1,200ths of what it was back then. Because in gold, that's how much it will now buy you, a lot less. And if you try and buy the same products, go on, I'll take questions at the same time.
Right, this thing, Chris, is with capital gains in gold, can you show that graph to the Inland Revenue?
You can try and show whatever you like to the Inland Revenue, but if it doesn't suit their laws, they'll just change the law.
Yeah, I know. It's like ridiculous because it's in reality, if you make some money on gold, you're not really making money at all.
At the end of the day, yeah, you can say it's a store of value, and they'll say, you've profited, so we want half of what you profited by, but you're saying, no, hang on, I didn't profit. It's the same as the HMRC lists what is VATable and what isn't. It's totally arbitrary. It's made up by them for whatever they can make money out of, and they decide the rules. The dinar and the dirham is the oldest legal tender in the world. It's not on the HMRC list, so therefore it's VATable. Every other coin is. Who decides? They decide. I don't make the rules, we just follow them. I hope that answers the question. So anyway, so you've got, if you just turn the graph upside down, you can see that pretty much gold is pretty standard and everything else falls in value. Now, why would I say this is a gold dealer would be probably the main question in your mind. Just keep that in mind, and as we come along, I'll explain a bit about monetary theory and why I still think it's a good idea. But if we stick to gold and silver ratio, now, there's loads of different figures banded around, but I think these are pretty accurate. I mean, David Morgan quotes some of these figures. So the historical price ratio, so that's, and you've got gold to silver. So basically, silver on average is a 1/16 of gold for the history of time. But your deposit ratio, which is actually how much gold and silver there is, how much there is around under the grounds, what they think is still mineable, is about 12:1. So we're already slightly lower. Now, weirdly enough, I don't know why, but in the Egyptian dynasty, they said 1 bar of gold was equivalent to the same weight of 2.5 bars of silver. So I don't know if they had a lot more silver back then or a lot less gold. I have no idea, but just so you've got an idea of the ratios. And then if we go back to the 1950s, now this might shock you and probably will make you not want gold so much, but it will make you want silver more. There was 1 billion above ground ounces of gold, but there were 10 billion ounces of silver in the 1950s. So that's how much has already been mined, how much was in circulation, being used in everyday life, whether that was investments or jewellery. I mean, these days it's used in technology more, but maybe not quite so much back then. But if we sort of jump forward to 2010, there's now 6 billion ounces of gold above ground, but only 500 million ounces of silver. Now that's quite a shocking fact, 10:1 going the opposite way. So if you think about investing in gold or silver, I would suggest that if you can store it, silver has much more potential to go up in value because it's used. Gold can be used if you've got a mobile phone, a digital camera, a video camera, whatever you might have, you'll probably find some gold in it, but you'll also find some silver. When they recycle those materials, they can take the gold back out and use it again, but silver actually gets used up. When it's used in processes, it's used in a lot of healing processes. A lot of you may have come across colloidal silver. It's actually used for a lot of health things. It's used in war zones, in vests. You'd be amazed at the amount of use of silver, but it actually gets used in its processes, so it cannot be recycled to the same level. So it's been continuously depreciating. So therefore, there isn't so much silver left. So theoretically, you know, if you had 50 grand, you can buy a small amount of gold, which will be a millionth of the world's supply, or less. But if you had the same amount in silver, you could actually buy up a decent portion of the world's available supply of silver. So you may have seen they cornered the market in the 1980s, and you think, how the hell did someone do that? Well, because there isn't actually that much out there to corner, and its price is about a 16th of the value. So it's actually, when you start to look at the figures, you can see where they're coming from. So if I look at the gold versus our money supply, in the UK, as of last year, there's apparently, I wish I had it, but there's £20 billion of notes and coins. But yet in bank deposits, £646.6 billion. So the money you see flowing around every day is actually a very small fraction of what is actually out there and moving around in our system. And if you look at our gold deposits, I know it was talked about earlier about Gordon Brown selling off. Don't blame him too much. He was basically told to, and pretty much every other European country did at the same time. So it wasn't some random fluke that he sold it when it was at the bottom. But if you work out what we've got, we still have about 10 million ounces of gold in our vaults somewhere that will be told you at some point, I'm sure. I'll explain a bit about that later because the IMF produces these results. So if you actually took that, and if you went to a gold standard today, and you say, right, well, there's that much money in notes and coins, 20 billion, and we've got 10 million ounces of gold, so therefore, per ounce, for a gold standard right today, we would have to give it a value of $3,250 an ounce. That's just maths. I'm not saying it's going to go to that figure. But I'm just saying if there's that much money and that much gold and you want to go to a gold standard, that's how much it's worth today. But that's only the notes and the coins. So what happens if you add in our bank deposits? Slightly higher figure for gold. I'm not suggesting it's going to go to $105,000 an ounce because I think you'd all probably just start laughing at me. And I think you'd probably buy out the world supply of gold as quick as you could. I certainly would. But if you compared that, that's just for the United Kingdom. The world doesn't actually rate so highly. The world reserves, as quoted by the IMF, are 165,000 tonnes, just above, 5.3 billion ounces. Now, if you take the world financial assets, it's 197 trillion. Sounds a lot, but if you divide one by the other again, you still end up with $37,000 per ounce of gold, just to try and make the two equal, because they keep printing money. It's not really hard. The more you print, if you want to go to a gold standard, the more that gold has to be worth to equal the amount you've just printed. So don't think I'm quoting these figures, I'm just giving you some ideas because the gold standard has always been based on money. So if we ever try to go back to it, something's got to give. And at the end of the day, you can't take the money back you've given out. So logically, you have to go the other way to meet it. Now, these are the IMF World Official Gold Holdings. These are the 2010 results, which are freely available on the web. So I do suggest, you know, if you're scribbling down notes now and you've got a question, you can ask it. But if you're a bit concerned about anything I'm saying, just go on the web. The IMF are free to produce any of this data, so you can check any of it out. So, as I said, 165,000 tonnes, about 5.3 billion ounces. Now, if you put that in a block, it's 20 metres per side. So to try and visualise that, if you can visualise the Eiffel Tower, that block would slide underneath the Eiffel Tower without touching it. And that's the entire world reserves of gold. Doesn't sound that much, but actually that's quite a lot of gold.